That'll be really nice. I know Ladi will be very understanding, but Ladi, so just stay on your toes. We're able to get Derek,
right.
To answer that final question. That would be good. But
yeah,
I mean,
no problem at all.
Yeah,
and you did talk about electric vehicles
yes.
and hybrid vehicles. I hear in Europe they're preferring the hybrid vehicles to the electric vehicles at this point. So there's a lot playing out, at this point.
Yeah.
And I would love the car makers to start making CNG cars from scratch, so
in
I don't
Nigeria.
have to convert. At some point, just produce it. Produce a CNG car.
Ladi, I know you're
that.
dragging me to a long, long discussion, but right. I'm not going to fall for that.
All right. Let's see what's happening in the global space. At this point, we're seeing President Trump there has announced a $5 million gold card visa program. So this program, will allow foreigners to obtain a special, gold card visa for $5 million, which would grant them a green card privileges. This one, so it's a pathway to, U.S. citizenship. The program, which Trump described as legal, that could be launched within 2 weeks. So I'm guessing everybody watching out for that. Then we see the U.S. dollar, that's lifted from an 11-week low against major, currencies in the market. We know we're watching that currency market with the DXY. It's been boosted by a bounce in, most of the, that's the short-term treasury yields in the market there. The Canadian dollar also rose too. We see the Canadian dollar, that rose earlier but slipped to a 2-week low. And the Mexican peso that weekend, we've been watching both currencies, the Mexican peso and the US dollar and how they've been playing out. Then we see Tesla's market value, that tumbled below the $1 trillion mark, pushing its market value below that level for the first time since November, after data showed the electric car makers' sales that slumped in Europe. And it's quite a coincidence. We see Bitcoin also fell to a low not seen since November. We know the relationship between Tesla and Bitcoin. Then we see Aston Martin. They've announced that it will reduce its global workforce by approximately 5%, cutting around 170 jobs. That's a big one there. As part of its strategy to cut costs and fuel future investments. We're seeing a lot of cost cutting, everywhere now, even with DOGE in the U.S., with the Department of Government Efficiency. Then German consumer sentiment is set to take a downturn in March, defying expectations for a modest rebound as households remaining cautious at this point amid growing economic and political uncertainty in Europe's largest economy. But let's take it on to Asia now. Let's see what's playing out in Asia. The Bank of Korea, they recently made a significant move to address economic challenges by cutting their interest rates by 25 basis points, bringing the benchmark rate to about 2.75%. Well, joining us now to break it down for us, we have Amanda Wolverton. She's a global marketing executive. Great to have you, Amanda. Good morning.
Good morning.
And
thank you for having me.
Thank you for staying up to catch the show today. I really appreciate that.
Absolutely.
All right, so we're seeing the Bank of Korea there. They've cited weakening consumer sentiment and concerns about the U.S. Tariff policies as key reasons for this rate cut. But how are you seeing it?
I think you just nailed you just hit the nail by the head. The South Korean economy right now facing headwinds from slowing growth engine, potential U.S. tariff threats, and also domestically political unrest in the country. So that's why these are the key 3 pillars that are driving the shifting monetary policy in the country. The Bank of Korea just cut rate to 2.75% under these pressure. And then it's because not only there's a potential risk in the trade, but also due to domestic confidence is wobbling. So in addition to that, South Korea is a global bellwether, both a technology company, both a technology powerhouse globally, as well as a export powerhouse. So that might have ripple effects globally in the supply chain.
And, with U.S. tariff policies expected to, hurt South Korea's exports, how might the rate cut, help in mitigating the negative effects on, because we know this economy is mostly export-driven?
You're absolutely right. 40% of the South Korea's economy is for exporting. So to the government at the central bank, protecting the export capability and then the part of the sector is essential to the growth. So this is why that South Korea government has recently announced $254 billion rescue package or protection package, I would be more precise, for the export sector.
All right, and definitely it's all about inflation forecasts. In 2025, investors want to know, what the expectations are, and we're seeing, signs that inflation, globally, that might stay elevated with most of these tariff issues. But we see the Bank of Korea, they're forecasting a steady 1.9% inflation forecast. So given the rate cut and lower growth expectations, how do you see, the risk of inflation deviating, from the forecast we've seen so far?
You're absolutely right. The forecast for inflation actually has been tamed more than 1.9%. They recently revised the forecast to 1.5%. That is expected to be stable throughout 2025. And this is below the target of 2% from the government perspective. So that leaves some room for them to cut rates to stimulate the economy. So despite all the threat from potential tariff threat, including Trump was talking about that he might impose a tariff on cars and semiconductors, which are the two growth engine for South Korea's export economy. South Korea is still sitting in, for the central bank, at least from their perspective, a comfortable position, despite the political uncertainty in the company, that they still have room to manage in terms of monetary policy to both drive growth as well as keep inflation tamed.
All right, definitely investors just want to know what's going to play out with interest rates, going forward. We know how investors in the equities market, they don't like interest rate hikes. Definitely that hurts, their portfolios. But thank you so much for joining us, Amanda Wolverton, as the Global Marketing Executive. And thank you for staying up. Thank you.
Thank you for having me.
All right, so there you have it. It's all about the tariff wars at this point, and everybody just wants to know when it's going to end. At this point with Trump, talking about tariff wars in Mexico and most of these countries. At the end of the day, investors are worried about what's going to play out with inflation. I'm also watching out for NVIDIA.
That's a big one for
results,
today.
For today. That would definitely spur investors.
Yeah, I'm sure Anita will have a good time with the numbers,
right.
Especially NASDAQ during intraday or features for the United States.
Yeah, we'll get more details at 1 p.m.
Yeah, thank you. See you there.